This segment of the halftime report is what we call Queen's Court. And what I like to do on Queen's Court is come in here and ask these fine gentlemen a couple of questions, maybe one or two. Could be a trade idea, could be a big picture idea, it could be macro, it could be micro, it all matters. It's just part of the discussion. So here is the question for you guys for Queen's Court. And I love the conversation that we started having with the different, sectors and areas of the market where we're seeing money coming into the space, money leaving the space, all that good stuff. And the question I have for you is about adding exposure to a certain area of the market. My specific area that I'm eyeing right now is, like we alluded to, is tech and gold. I already have some exposure to both of these spaces, but when a lot of us are sitting on some cash and we're now looking to deploy said cash and we want to add exposure, how do you approach two questions? One, when do you add exposure? For example, with Microsoft, we're looking at a breakout here with Microsoft. I want to add exposure to Microsoft. I also want to add exposure to gold. So when you're looking at such things, when do you add exposure? And more specifically, where do you add exposure? If you're looking at two things all equal, which space, in my particular example, gold versus, Megatech and Microsoft, when and where?
I think it's a wonderful question.
It's an important question.
Yeah, it's a wonderful question. When and it's not one of those scenarios where it's like, okay, that space is bad and that space is good, so add this space. Like both are good, right? Mm-hmm. Both are fairly close to either triggering or setting up to trigger. And so when you're looking, let's break down Microsoft first here. When you're looking at Microsoft here, one of the mega cap big tech stocks that we talk about, it's an Apple and Microsoft world. You can throw Google in there a little bit. You can throw, Meta in there a little bit. You can throw Amazon in there a little bit. But I do think there has been clear separation from the big stocks, and it's an Apple and a Microsoft world versus those other three a little bit. But when you're looking at Microsoft here, recent breakout of 280. Price target is 300 is where we expect it to go. And again, when you're looking at those price targets, typically you have what's called a T1 and a T2 target. T1 target is kind of that first decision target. It's usually a conservative target where basically we're seeing something technically where we just think there might be some hesitation to it, or you want to see it digest that technical environment. That's a T1, but typically T1s are a decision on stop loss. Hey, do we trail the stop loss? Do we still give it a little bit of room? How's the momentum? We go through that type of process. When you get into T2 is more of a, hey, tighten up that stop loss, scale out. Maybe just lock in the profit on the trade, those types of things. And so when you're looking at Microsoft right now, it is a trade that is currently ongoing because it was on the report for a breakout of 280. We got our breakout 295, and you got some chop right in the 290 to 295 level. And so right now you're forming a little bit of that secondary trigger, right? First trigger above 280, second trigger above 290 here, especially with what is occurring here today. So you got a little bit of a high base working right here, but you got to because the real trade was above 280, not 290. So because the real trade was really kind of that 280 level, not the 290 level, you're just tied against your what you would be your ultimate target. And that's got to be in the $300 range, whether you're talking 300 or slightly north of 304, it's got to be in that $300 range. So you're only about 12 points away from where you would get into some significant resistance, in my opinion. The 290 breakout for me would just be a little bit of a secondary trade into that $300 price level, but I don't feel like you have enough room at this point to justify it over what is happening in the gold area of the market. If we were doing this exact same thing, Emily, at 300, I would have a different answer. I would. But because I think you have to take into account 300 here on Microsoft, you're $10 away from a 290 target or a 290 trigger to get into that 300. And that's just not a very big zone. That's not a very big pocket. Going from 280 to 300 is a little bit of a better scenario. So I kind of feel like Microsoft's in the middle of something working into 300. I think it would work out for you because I do think Microsoft eventually gets into the $300 level. But again, I think you're dancing for pennies a little bit in front of what is happening in gold. When you're looking at gold right now, the ultimate question on gold here, and it's something that like people have to consider here. There's a lot that could occur on gold in the short term. A snapback could occur easily could occur. A little bit of a hesitation breakout could occur here. Easily could occur. But what else could occur is parabolic up into 2100. And at that point, I promise you, you're probably regretting not looking at gold versus trying to catch a 10-point movement on Microsoft. But the not the short term, but the long-term potential you have here on gold, I think you're going to want to add. And even though the train has left the station bar by bar, I mean, you're up 40 points here today. You're doing really, really, really good. And you got to trigger pretty, if you weren't triggering above 2K, you got to trigger pretty aggressively here. I get it. Maybe you give it a couple days, but I would take any secondary here on gold over Microsoft right now. And it's because there's not a better theme in the market than the theme we're rocking on gold right now. There's a reason CNBC was leading with gold coverage when it's usually just people like myself talking about gold all the time. And so, and like-minded individuals on gold, I would say. But when you're looking at gold, I just feel there's significant opportunity above 2K. Now, again, a lot of things can occur in the short term. This is not something that you would say, okay, let me bar this above 243. Let me put a stop loss underneath the 9 EMA. No, that's ridiculous behavior. This is not what I'm talking about. I'm talking about even if gold comes down a little bit, you not caring because of the potential opportunity here.
Yeah, I mean, because like, let me interject there. Let's say unemployment report comes out, jobs strong, right? You know, you could get that knee-jerk reaction Monday morning, right?
Well, yeah, because the dollar goes up in that environment and gold snapbacks.
And so I think you ignore that noise. Like completely,
which means the only way to ignore the noise is to not even look at this from a short-term perspective, because you know, in this short term, gold's going to move against the dollar, and the dollar is going to move really, really, really closely against economic reports. And so you're going to have snapbacks here. You're going to have opportunities. Just to me, I think you're looking at this from a longer term perspective. I think you're looking at this on the weekly chart and you're saying, as long as you stay above 245 at this point, we're rocking and rolling all the way to up here around the 21. But again, guys, gold in US dollars has not hit an all-time high. Gold in every other currency in the history of mankind is at an all-time high, if not higher. Gold will get into the all-time high against the dollar very, very, very soon. It's already achieved it on every other currency, guys. On every other currency, you're already talking about gold breaking these highs already. It's the dollar that is holding it back a little bit here on the gold chart. And so I just feel there's significant opportunity, and Microsoft, I think we're going to get a very similar opportunity in a 10-point movement, but I think it's going to be even a better technical breakout since you already have a little bit of love on both spaces. I would prefer, not prefer, it's your trading account. I would advise that that gold more than Microsoft right now be added.
Coach Mark, you want to add anything to that?
Yeah, I mean, it just comes down. I plan on rocking like my 5 Bs, include bullion, gold, big tech, right? You know, like those are 2 bonds, black gold and Bitcoin. I plan on rocking at high percentages.
You wanted so bad to include Bitcoin in your Bs.
Dude, it's a B. Dude, it's a B.
He wanted to build his 5 Bs versus the 3 Gs.
Well, it was 4 Bs until OPEC came out and threw black gold on there too. You know, so I plan on, from a cash flow perspective, rocking those, you know. And so for me, like, I think all of the analysis here is long-term, right? Matt emphasizes at that point very well. And it's just like what are the big question I'd have if I were working with you as a student, I'd be like, all right, what are your rules on what your max allocations are, right? How do you manage those? When do you buy protection? All of that good stuff, right? Because just because I love an area doesn't mean I'm going to go put like, I'm not Warren Buffett. I'm not going to go put 38% of my portfolio in something good. That's not me, but maybe it's you, right? But like, do you have rules? What's your max position size? How do you manage that? Those are the questions that interest me. Like adding gold. Yeah, you add gold, right? Like, it fits the world that we're in. I think
it's a wonderful point, Mark, because whenever you design a portfolio, and I've designed a lot of portfolios in my life, you start with percentage allocation in asset classes, percentage allocation here, percentage allocation there. Whenever I'd get to the gold conversation, it was always, okay, is it 5? Is it 10? Is it 15?
Whatever it is, right?
Whatever it is, right? But it's about whatever that max allocation is. And so if Emily, because you already have, money allocated in gold, you already have money allocated in Microsoft. This was about adding exposure, correct? If I correct, okay.
Yep.
If gold's at your max allocation, then I would say, okay, you're probably already well balanced already. If gold's not at its max allocation, the question I would have is, what do you need to see to have max allocation in gold? Because you have a breakout.
Yep.
You have a theme. You have the Fed hypothetically pivoting. Okay. Well, pivoting into a pause, call it whatever the P is. Either P is good for gold. You have economic recessionary conversations everywhere.
You got things that could blow up.
You have 5,000 years. And I'll just say it like this. You have 5,000 years of history, of evidence, of gold being a safe haven in these environments, regardless of whatever country you lived in, regardless of whatever currency that was utilized in over 5,000 years, which accompanies truly thousands and thousands of currencies. What else do you need to see before you do get to that allocation level? Microsoft, I think there's more opportunity there in terms of short term. You can trade Microsoft. You can add in, you can scale in, scale out on Microsoft. I think the gold analysis is one of parking money and not even worrying about it. Not even worrying about it. Treat it like a safety account. Treat it like a safe deposit account. Treat it like a savings account. Treat it like you're saving dollars in a raw commodity and just store it somewhere. That's how I see them.
Cool.
Yeah, I know. And so, yeah, portfolio allocation, because like whatever it is, like Emily, without giving me a number, are you at max allocation of gold? Yeah, then there's ways to add. Right now, do you want to add to the miners? Do you want to add to do something like GLD? I mean, whatever it is, right? There's ways to add exposure, right? There's ways to add exposure through that. And so, like, if I'm not there and I'm like, all right, I want some gold, I want to add to exposure, right? You're not going to get a better signal than today. And I think Matt's point is very well. You could have a lot of short-term outcomes, but one of those short-term outcomes is another big green candle or two like this, right?
And
like,
that's the ultimate thing. You
could have a snapback, but it might not, right?
You could have a lot of different things technically. We don't know.
Waiting for that snapback.
What we do know is this. This is day one of the breakout. That's what we know. We know we got a big green candle on day one of the breakout. That's what we know. The most likely scenario is continuation. That is the most likely scenario. That is the probable outcome. And now, maybe you don't say it's 90%. Maybe it's only 51%. Who cares? That is the most likely outcome, is more price appreciation, more price discovery. And so if it's not today and you wait on, say, a snapback, well, again, we're only one day into the breakout. It's not like we're talking about consumer staples here that is 8 days into the breakout. Completely overextended here. We're talking about GLD. And then this on increasing volume. 1 day into the breakout. Let me say that again. This is 1 day into the breakout. And so the question ultimately is if you do want to wait for the picture of perfection and wait for that pristine entry into the position, man, brought to you by the letter P on that sentence. yeah, you might get it, but again, what's the most likely occurrence? More upward moving in price.
Hey,